For more on how to position against this backdrop, I'm joined by Silas Myers, co-founder and portfolio manager at Mar Vista Investment Partners. Silas, thanks for being with us. Let me just throw this idea at you. Are we paying too much attention to rate cuts, what may or may not be on the table when you've got a strong economy and we're heading into earnings next week?
Yeah, I mean, we obviously had a very strong job report today, which shows the underlying strength of the economy. And we've been spending a lot of time as a market really focused on what the Fed was going to do. And that started in December. 6 cuts were the expectation, quickly moved to 3. And then when you have reports like today, it really complicates the Fed decision because you've got the underlying economy doing fairly well, and inflation is at bay, and in fact has been declining. So ultimately, in our opinion, the Fed may cut less than 3 times this year. And a lot of that's been priced in, but ultimately, we think that the interest rate regime that we're in right now is actually be okay for the economy. Right. So we wouldn't be surprised if it didn't cut at all.
And you've seen markets stay resilient from 5 cuts to 3 to maybe 2 this year. How are you positioning for the rest of the year? Obviously, in the first quarter, we saw the rally expand out to other sectors. It hasn't just been the Magnificent Seven. It's been the Fab Four. It's been other sectors, especially focused on commodities. How are you positioning yourself going into the rest of the year?
Well, yeah, I mean, at Mar Vista, we believe that when we've had a strong first quarter like we had this year, it bodes well for the rest of the year. And we're seeing strength in the types of companies that we like to own at our firm that are really focused on wide moats, have extraordinary opportunities to create shareholder value through investments into the business as well as M&A, and with really strong capital allocators at the helm. So we're positioned with some leverage to more of the industrial space, some in technology as well as basic materials.
I want to ask you about.
And feel pretty.
I'm sorry to interrupt you, Silas. I want to get to gold because we're seeing, fresh record highs. We've been looking at it all week. What is it telling us here? Is it telling us that maybe the markets are being more driven by geopolitics than they are Fed speak and the number of rate cuts that may or may not be on the table?
Yeah, I mean, I think that geopolitics is more of an exogenous event. And typically when you've had those, the market rebounds fairly quickly. So it's hard to manage an investment process around a geopolitical risk. And in Mar Vista, we think more longer term. Ultimately, having an average of 5-year holding period, short-term events aren't as important to us as giving the management teams of our investments the opportunity to execute on their business strategies and grow shareholder value. So I think there's some impact, obviously, from the risk of geopolitics, particularly a hit to oil prices and the increase in oil prices despite production increasing. But ultimately, thinking 3, 5, 8 years down the line, a lot of the businesses that we own and have in our universe, we think will do extremely well.
Okay, from the macro, I want to go micro as well and ask you specifically about Tesla. Obviously, Tesla is Tesla, trades sort of on its own. However, could it be seen as perhaps a canary in the coal mine as we head into earnings season? We saw that big drop on the back of disappointing deliveries, and then today's report that might not be producing its low-end model after all, another drop. Could that be an indication that if we see companies miss even slightly over the next few weeks going into earnings, we could see the market punish them more than they maybe have over the last year?
Yeah, and Tesla really is, I think a lot of the issues there are idiosyncratic, not necessarily economic. They've got more competition now. They've had to cut prices in order to compete. They've been having challenges with production. But ultimately, what's important to us at Mar Vista is, a company's ability to outperform expectations. And in many of our companies, particularly in the aerospace and industrial gas industry, we're seeing the second half looking fairly solid and a good recovery off of a lower comp base from the last year's second half.